Well, it's turning out to be a session where we are seeing the entire market, in fact, a little bit diverse. So we have the Bank Nifty, which is managing to outperform. No prizes for guessing what exactly is leading the gains there, with the likes of Axis as well as ICICI Bank really pulling up the index. Nifty Bank, like you can see, up around 150 odd points. But that's really not reflected too much in terms of the frontline indices, because the index itself, the Nifty, is absolutely flat with a little bit of a negative bias, you can say. So down around 17 odd points. We have the Sensex also, which is down around 28 odd points. A lot to discuss in terms of stocks. So we do have a couple of bank stocks which are in focus. Like I mentioned, a couple of result reactions such as Granules, which is up around 4 odd %. And we have numbers which are coming out today, ICICI Bank, to name a few. So a lot to discuss over the next 1 hour. Let's get going. And obviously, a couple of these NBFCs continue to be in focus. DHFL, post that conference call too, has not managed to gain too much, and currently down around 5 odd % for that stock. Hi, Prashant.
Ekta, hi. I mean, so broadly, financials aren't having all that bad a day. I mean, actually, the top two gaining indices are the Nifty PSU Bank Index. PSU Banks as a bunch did very well by close yesterday. And the Nifty Private Bank Index is also higher. It's a second top gainer. Bank Nifty is at number 3. It's up 0.5% or so. So it's financials, in terms of what's doing well. Another thing is that the market breadth, the overall broader market for the second day running is doing much better. It was true yesterday, it's true today. So advances outnumbering declines so far. I mean, let's see if things start to turn around, but so far it's that way. The big one by far is going to be ICICI, and what the report expectations are that numbers should be good. Axis gave us a hint of that. So if you believe that, on the corporate side, things will keep getting better, ICICI will be in focus. Let's just quickly put up Yes Bank as well. I mean, it's having no such luck in terms of a rebound or anything. It's, I think, back at almost 200 rupees, 201. Yeah. So there is pressure and fresh pressure on Yes Bank coming in. Sudarshan is with us with a quick check on what he's making of things and what you'd want to do. Sudarshan, thanks very much. First up, your view on the Nifty and what you'd like to do.
Yeah, good morning again. Well, there are two undercurrents in the market. The first is the intermediate trend that is down. I'm looking at much lower levels as time goes by. But I did think that the oversold nature of the market can give it a tradable bounce on the upside. And the view has been that we can buy this bounce today morning. That has clearly not worked out. But anyway, the day is still left and we have tomorrow also. So I would still say that with a stop at 10,600, take a trade on the long side and see if it works out. The markets are ready to give us a pre-election oversold up move. We just have to wait and find out if we get it. But the intermediate term trend is down, and understand there are two different undercurrents in the market currently.
Okay, Go ahead, Sudarshan.
Thanks. Individual stocks are, mixed. Mid caps are doing well. Just now Prashant spoke about how advances are are more than declines, and that's reflecting in the mid cap rally, a small rally, but still there. So Dr. Reddy's is a buying opportunity. That stock is outperforming the pharma sector as well as the broad market, and that should continue. After a long time, V-Guard is coming into a buy. Remember, V-Guard was the star of yesteryears, and after a deep and correction and a protracted consolidation, it's coming back into momentum. So V-Guard and Dr. Reddy are buying opportunities. Bharat Forge, which is in a bear market now, something which is very unusual, but for a good quality stock, but it is. So that's a short sell for the day.
Okay, thanks for that. Sudarshan, we've got a question coming in from a viewer. Ronojoy has 250 shares of Delta Corp. He's purchased them at 228 rupees. He intends to stay invested for a year, wants to know if he should do that. What would you recommend? Delta Corp.
I would recommend he sell now. This is a choppy market. It's difficult to hold on to mid caps and even to make a forecast on how they will behave. You have already seen how mid caps suddenly turn on a dime. They do something and tomorrow morning they do something very different. This is not a good market to be in mid caps. Exit Delta Corp. Be patient. 6 months later, you will have ample buying opportunities in different companies and different sectors.
Okay. All right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in and taking us through all of your recommendations on the technical front. Well, let's focus on one stock. DHFL is the stock that we've been talking about after the sharp fall that we saw yesterday. And despite those clarifications which came in from the company in the conference call which was held earlier in the morning, the stock is still under pressure. So down around 5% at this point in time. In fact, let's listen in to what the management had to say themselves in that conference call.
It is our belief that we will be able to generate liquidity of another 4,000 to 5,000 crores in the next few months through continued sell down of project finance loans, which we are already committed to. We are also in advanced stages of selling a non-core asset that will bring in non-dilutive capital into DHFL. DHFL, as a responsible corporate, all through its 34-year journey, has never delayed or defaulted on repayments to banks or any other financial institution, including our retail investors. Even in a very tough liquidity environment from September 24th onwards, we have repaid liabilities of nearly 18,000 crores. All the lending that the company has done, whether it is for slum rehabilitation projects or non-slum rehabilitation projects, is in line with the company's policies. All our loans have a complete security backed by the assets which are mortgaged to us, and assets they are fully secured, and projects which are various stages of approvals and clearances that's in force. We do not have major group lending, we don't have any large exposure to a single group or so, and we will not go into client specific. But then we have an exposure norm in terms of not exceeding 2,000 crores per group. That's an energy exposure norm. And 1,200 crores for a single exposure. And all of them are well within that.
Okay, so that is DHFL. The other one is Axis Bank. It still remains one of the top gainers. The numbers came in yesterday. You heard from the new CEO in charge, and commentary is what was very positive. The CEO putting out a target ROE of 18%. Abhishek is here with the highlights and, of course, what the street is making of it. Abhishek, morning.
Morning, Prashant. So, if you look at the NII growth, that is net interest income growth, it is the highest in last 10 quarters. And for the first time in 10 quarters, the NII growth is above 18%. And that is driven by the loan book. Now, the loan growth is at 12.9% YOY. But if you look at the domestic loan growth, that is at 18% YOY, driving the net interest margin to a 6-quarter high of about 3.47%. The slippages increased quarter on quarter, but they were below the analyst estimation. So, slippages were at 3,746 crores. That compares to an estimation of 4,800 to 5,000 crores. So the asset quality improved as gross NP ratio declined to 5.75 versus 5.96 in the previous quarter. And as you mentioned, the ROE target of 18% as laid down by the management is on the back of 3 key reasons. One is risk normalization. Second is business mix optimization and improvement in their operating efficiency. So if you look at the brokerages, out of the 7-8 brokerages that we have, 4 of them have actually upgraded their target price on the stock, and largely brokerages are positive on the stock, with Jefferies actually upgrading the stock, Credit Suisse upgrading the stock to outperform from neutral. Back to you.
Okay, well, yes, Abhishek, thanks very much for that. 52-week high for the stock stands at around 703 crores. And I just want to add one particular piece or statistic which Abhishek mentioned in terms of the slippages. Remember, the FY18 quarterly average for Axis in terms of slippages was over 8,000 odd crores. So compare that to that falling to around 3,750 odd crores. So you can see the kind of reduction that we've seen in terms of the Axis Bank slippages.